Get ready for the retail takeover, because this week we are diving deep into massive financial results. We start with e-commerce giant Amazon reporting incredible first quarter 2026 revenue gains, showing how their focus on direct-to-consumer sales is paying off across the Americas and fueling robust goods sales in North America. We'll also explore how Amazon is changing the game for logistics by opening up its entire supply chain service portfolio to outside businesses, potentially shaking up the entire delivery landscape. This is huge news for everyone involved in commerce.
Here's a simple way to protect your phone without stress. This ALAN 3-pack comes with tempered glass screen protectors, camera lens protectors, and an installation frame for an easier, cleaner fit. It's clear, case-friendly, and built to help guard against scratches and everyday bumps. Check the link in the comments to get it on Amazon.
Next up, we are looking at the luxury world where major players are showing strength. We examine the impressive performance of Hermes, which amassed a staggering 4.1 billion euros in first quarter 2026 revenue, driven by strong sales of leather goods and accessories, despite some headwinds from the Middle East conflict. We also check in on Prada, which continued its trend of steady improvement, achieving a 14% increase in net revenues overall, highlighting the success of their DTC strategy across buoyant markets. Now it's time for some serious growth stories from the fashion sector. We're tracking the phenomenal growth of Group Dynamite Inc., which expects total revenue growth between 22% and 25% in 2026, fueled by store sales expansion and a successful push of its Garage brand into the UK. We will also look at the performance of the Estée Lauder companies, which recorded high single-digit growth in mainland China, showing resilience in key Asian markets. And finally, we wrap up with the latest on the stock market action. We look at the massive news hitting Amazon stock investors, as Amazon delivered accelerated growth in key categories, pushing its shares up significantly. Don't miss out on these critical updates. Stay tuned right here for all the details this week. E-commerce giant Amazon and several key fashion and beauty retailers have reported robust first quarter 2026 financial results, highlighting strong performance driven by direct-to-consumer strategies. Amazon's net sales growth was fueled by strong goods sales in North America, despite increased demand for its web services. Simultaneously, luxury groups like Prada, Hermes, and Ermenegildo Zegna reported positive revenue growth, benefiting from consumer spending in the Americas as geopolitical tensions impacted the European market. This success underscores the efficacy of direct-to-consumer channels. Prada Group achieved 10% year-over-year growth in retail sales, reaching 1,245 million euros, with net revenues increasing by 14% to 1,428 million euros, supported by strong performance across the Americas, which saw 34% sales growth. The group maintained momentum through leather goods and the See Beyond collections, while Miu Miu experienced slowing growth, attributed in part to the Middle East conflict. Hermes posted a 4.1 billion euros revenue in Q1 2026, marking a 6% increase year-over-year. This growth was driven by strong in-store sales, boosted by high demand for leather goods and saddlery, alongside silk and textile products. Although the conflict led to weakening tourist and wholesale activities, the group remains positioned for future growth in the Americas and Japan. Canadian retailer group Dynamite Inc. anticipates total revenue growth between 22% and 25% for 2026, following a 45% increase in earnings over the last quarter. This growth was propelled by store sales, enhanced by the expansion of its Garage brand into the UK and a highly successful digital strategy, with e-commerce sales surging by 63.3% between November 2025 and January 2026. The company plans to open 10 to 12 new stores in 2026. In contrast, not all sectors showed uniform strength. Columbia Sportswear Company experienced a slight decline in net sales due to anticipated lower wholesale demand for its spring 2026 collections. Lanvin reported a revenue drop in 2025 due to broader macroeconomic pressures as the group continues its repositioning efforts in the luxury sector. Meanwhile, Estée Lauder companies recorded high single-digit growth in mainland China. Amazon is reportedly expanding its logistics capabilities by offering supply chain services to external businesses, aiming to capture a larger share of the business delivery market. This move positions Amazon to compete directly with established carriers like UPS, FedEx, and the U.S. Postal Service. According to reports from Geekware and company information releases, Amazon's new offering, termed Amazon Supply Chain Services, consolidates the company's freight, distribution, fulfillment, and parcel shipping operations into a unified service accessible to any business, irrespective of whether they sell on the Amazon marketplace. This strategic move targets businesses that rely heavily on shipping and receiving goods, suggesting Amazon intends to be the preferred partner over traditional third-party carriers. The market reaction to this development has been mixed, with shares in FedEx and UPS declining, although Amazon's stock saw a slight increase, signaling investor confidence in its fulfillment services. Evidence suggests Amazon is already leveraging this infrastructure. Companies such as 3M utilize Amazon for moving products to distribution centers. American Eagle Outfitters employs Amazon for last-mile delivery, and Land's End fulfills sales orders directly from Amazon warehouses. This expansion is built upon Amazon's massive existing infrastructure, which includes 200 fulfillment centers across the United States, 80,000 trailers, 24,000 intermodal containers, and 100 aircraft, capable of handling 13 billion items annually. The new supply chain arsenal is now being deployed to track and deliver goods for a broader business clientele beyond its core consumer base. Amazon is strategically expanding its supply chain services, opening its extensive freight, distribution, fulfillment, and parcel shipping capabilities to a wider range of external businesses, including sectors such as healthcare, automotive, manufacturing, and retail. This move represents a continuation of Amazon's established strategy of developing internal solutions before offering them to customers, a model already successfully implemented with services like Amazon Web Services and its advertising business. The expanded offering includes Amazon's established 2 to 5 day delivery timelines and advanced inventory forecasting capabilities. The service is no longer limited to third-party sources, as evidenced by existing clients such as Procter & Gamble, 3M, Land's End, and American Eagle Outfitters, who already utilize Amazon Supply Chain Services, or ASCS. Analysts view this expansion as a natural progression, designed to significantly increase the utilization rates of Amazon's vast network of warehouses, cargo planes, and delivery trucks. The primary objective appears to be monetizing this existing capacity. Furthermore, this initiative is seen as a competitive maneuver against established logistics giants like United Parcel Services, UPS, and the U.S. Postal Service. While the financial impact on Amazon's bottom line, specifically regarding business size and margins, remains to be fully assessed, experts suggest that higher utilization rates are generally favorable for improving profit margins. The move signals Amazon's intent to fully leverage its significant infrastructure investments in logistics. Amazon stock experienced a significant upward movement, gaining 1.36%, driven by accelerated growth across its key product categories. This positive performance was highlighted in recent market analysis, indicating strong momentum for the e-commerce giant. The stock prices referenced for this analysis were the afternoon closing prices recorded on May 1, 2026. The information was published on May 3, 2026, suggesting that investors are reacting positively to Amazon's recent performance in core areas of its business.